I'm making a move. Study long, study wrong. Ain't nothing gonna happen on its own. I'm making a move. Don't need no hinges for this song. I got joy all through my soul. I'm making a move.
Broker Breakdown starts now.
Bryan, so you're the founder and CEO of Transactly, which is the biggest at this point transaction coordinator platform in the U.S., able to work with agents in any state across the country. So let's just start out by telling us a little bit about what Transactly does for agents.
Yeah, good question. And just we are the largest, I would say, tech-enabled transaction coordinator platform. That's not all that we've really set out to do, though. So at the core of what we are, we're a technology company, and we aim to integrate and automate a lot of what happens across the transaction. So what we do for agents is anything that we can do from contract to close, and we do some things before listing as well, to just speed up and reduce the amount of time it takes for them to do a transaction. So that means they can either use our technology themselves, or they can use one of our hundreds of coordinators across the US that are powered by our technology.
Oh, interesting. Okay, so they actually have a couple different options there. Well, tell me more about that, because usually when we talk to like a tech company, it's just, hey, we've got this platform, you can subscribe to it, and then you use it yourself. And I know that's kind of overwhelming often for a lot of agents. So if I wanted to work with one of these coordinators, I mean, how does that process work, and how did you guys decide to offer that as well?
Yeah, maybe it's helpful just to give you a little bit of background on how we started. I think that could be helpful. So originally we just planned on providing software to agents, productivity software that allowed them to reduce the amount of time that it took to manage the transaction. Because a lot of the software that's out there for transaction management historically has just been for brokerages and reporting that agents use to report to the brokerage. So we started off in 2018 with something that allowed them to manage that transaction, automate some of what they could do. And what we found is that a lot of agents just didn't want the technology. I mean, we saw their coordinators as power users and so forth. And so, when we went to market, we found that there's really a stronger demand for doing some of this stuff. And so we found ourselves in a unique position where, okay, anyone can use our technology. So we have teams along with their own coordinators using our technology. And then we now have coordinators that they can jump in and help anytime. So, we've got, while they're using the technology, they can bring in one of our coordinators, use one of their own anytime. So we've really built a flexible platform that agents can use.
Interesting. Yeah. So this is, I want to ask more about that, because that's kind of that's a big adjustment to make, obviously, to sort of start as a pure technology play and then realize, hey, this is not exactly what people are asking for. So how do you make that decision, kind of thinking, because obviously it's always interesting to hear sort of the behind the scenes of startups, especially in those first few years when things are flexible and you can make some pretty significant changes. So I guess my first question there, and this a little bit selfishly, because I want to hear about this stuff for our business, but how do you determine that it's time to make that change? I mean, did you have some metrics that you guys set that you weren't just quite hitting and you had to figure out why, or did you just listen to the feedback you were getting and you heard it enough times to realize we need to make a change here? Or what does that decision-making process look like?
I wish I could say it was a clear-cut one. We make decisions much more measured these days with the metrics around usage now, but early days in any startup or anyone starting, and I think this translates to running a real estate business as well, whether you're an agent team or brokerage, is just really listening to your customers. And so, as I was mentioning, when we started and provided just software, we talked to every single one of those users, and a good chunk of them said, hey, the technology is really cool, but I just don't want another piece of technology. I'd rather have someone do this for me. Right. And so after you hear that consistent feedback, you start to lean into it and you give it a shot. And, there's a cliche term of being agile in the technology industry, and I'd encourage every business to do the same.
Yeah, that makes a lot of sense. So I guess it sort of shocks me that businesses don't ask their customers more questions and don't try to kind of figure this stuff out. But I guess if you were talking to, most of our viewers are going to be people in the real estate industry, agents, brokers, those types. So for them, I mean, what would you recommend? I mean, is this something where, should they be every single client they're talking to asking just sort of in general, like, how could I do better? Or what are some new things you want to see? Or what would you sort of suggest in terms of collecting that kind of information from your customers?
Yeah, I mean, that's an interesting question. Without a doubt, I mean, particularly for an agent, it's 100% a relationship business. So
Right.
I would hope, and I see it, the best agents and teams are really talking and getting rather intimate with their clients. So they should really look at this and try to develop some kind of theme around that. And, a lot of, you'll see a lot of talk about finding that niche. And that's the only way you're going to find that niche in any type of business is really listening to the customers and figuring out what's resonating best. And no one can tell you what it is. You'll have to find that yourself.
Gotcha. You got to put the work in, right? You're not doing the work, you're not going to get the data.
Yeah, longer term, you can get the data. I mean, as you get larger, and you don't have to own your own technology necessarily to do it as well. So that's why I would encourage anyone that is using third-party software to make sure that they have great reporting on the back end so they can look at things analytically. Because once you get to scale, so you've got a couple thousand transactions a year, let's say, or plus, now you've got some real data that you can look at that and establish trends. Like if I were an agent, I could see commission rates, let's say, in one particular zip code as opposed to another, so that you know how to be competitive in one area versus another area. That's just one example, but that's the kind of path that you'll eventually get to. But starting out, it's just pure qualitative feedback that you have to pick up, and it's hard.
Yeah, no, that is challenging. So, well, maybe you can give us some insight there, because obviously you guys working with a lot of the top agents and teams across the country. And I would assume, and you can tell me if I'm wrong here, but somebody that's proactively looking for a platform or a service to help them with their transactions is probably running a growing business, is probably having some success. So, what are you seeing? I mean, so obviously right now, the industry is changing a lot. The pandemic obviously disrupted the way we do things pretty significantly. So across those agents and those teams you're working with, are there any trends that you're starting to see emerge, any adjustments that they're kind of collectively making to service their customers better and kind of adjust to the changes that are happening?
Well, let me just clarify that we focus heavily on the actual transaction itself, and that's right, where we focus on helping agents. From a holistic or zooming out approach of the market, we're certainly seeing transaction numbers decline across the board.
Okay.
With agents, and you see it in market data too. I mean, residential existing U.S. home sales slipped a little bit in Q1 overall. But what we look at data for to help agents with during the transaction is to help with the people that they're doing business with. So, we see once a transaction starts, we work with the preferred title company of those agents. Well, we then pick up larger data to know which of those title companies are actually getting, getting clear title soon. Same thing with lenders. We're able to see when that approval actually comes back in time. And then we can help agents with determining, okay, who actually can move faster, which of these is most likely to fall apart or cause delays to the transaction. That's where we're really focused from a data perspective and helping our agents and teams. And we're kind of in the early stages of it. So we've seen a little bit on the title space, but not too much down the lending side. Because agents just see it qualitatively, right? Like, or word of mouth, hey, we've got a lender, and this lender is historically, cause delays. Well, we can actually see it in the data and show that to agents in the long term.
Oh, interesting. Okay. Yeah, that's a side of this I hadn't thought about. Yeah.
Yeah, like our mission as a platform for agents is to help streamline and simplify what they do, but that also means ensuring that this transaction is going to get closed on time. And so we, as a tech-enabled service, do a lot of the facilitative stuff, working with all the other parties that the agents work with.
Okay.
And we can help them gauge how well those other parties are doing as well.
Oh, interesting. Okay. So, and it sounds like that's something you're sort of in the process of developing further, but I mean, so it sounds like this kind of thing where as an agent, yes, I'm going to save my time, right? That's obviously what you're kind of buying back whenever you employ a service like this, but there's also insight that sounds like it's available to them. So is that something that are they able to kind of go in and see that stuff now, or is that sort of something you're building out? And maybe give us if you're okay with it. I don't know if it's secret, but if you're willing to sort of share with us some of the examples of the kind of insights they might gain, because I think the data is interesting, right? I mean, this is where you sort of don't even know what you're going to be able to figure out until you start to collect some of it and analyze it. So any ideas of what's coming down the road in the future?
So that kind of data is not available yet. It takes a long time of collecting data before you can parse it and make it put it in a format that people can digest and make sense of. And keep in mind, we really started ramping up in 2019, so we're still fairly early as a company. But I would say, I mean, agents, when they use Transactly, have full transparency into what's happening. So everything that our coordinators do is logged within our application, which our agents, teams, and brokerages have full access to see what's happening at any given time. So all those things that they see are actually data points that we can take a much more holistic view over time, and then spin up larger reports to show, how quickly things are closing and where they might be falling apart and so forth. So we're not too focused on things before the transaction, like how to pick up a client. It's really about how do you make sure that the agents, teams, and brokerages that we serve, when they get a client under contract, get it to close as quickly as possible. That's what we're 100% focused on. So still early days and some of that information that can help them out, but in the meantime, we're helping them out by saving time doing all that facilitative work that, I mean, really they shouldn't be doing anyway, like scheduling inspections and stuff. They should be building relationships.
Right. Yeah, that's a fair point. Well, and so it sounds like, when you get on the platform here, it's almost like the value of it is going to increase gradually over time, right? Because obviously immediately you're getting the main benefit, which is the service getting taken care of and saving all that time and getting more clients to closing and everything there. But then as you're collecting this data, you guys sounds like you're able to kind of continue to give them insight and opportunity down the road, So in other words, if you're watching this, get signed up right now because you're going to get that much more benefit over the long run. So that's cool.
Yeah, I mean, you have to think of it like every other relationship that you have, and that's how we think of it with every single agent that we serve is, the first transaction or two, we're still just learning and wrapping our processes around an agent's process. Right. And so over time, that gets better and better, and we can improve exactly what we do specifically for each customer that we serve.
Very cool. Yeah. Well, so maybe you'll have some insight here. This is more just my curiosity, but when you start working with some of these agents, I mean, what's maybe most surprising to them? Like, what are some areas where, so if I'm watching this and I'm thinking, well, I think I'm pretty efficient with how I handle my transactions. I mean, what are a few examples of things that are big time sucks or sort of big wastes of time that you're able to take care of for them?
And this is part of that taking and building the relationship because there's some trust. As what we aim to do is really make that closing process very streamlined and efficient. And what it means is letting go a little bit from an agent's perspective and having trust. And that's why it takes 1, 2, 3, 4 transactions sometimes to do that. We had an early client that did a video testimonial that I think he described it best as like, it was like using Transactly was like handing car keys to his 16-year-old for the first time. And It was that worrisome. But after a few weeks of letting his teenager drive, realizing that it wasn't so bad and actually is quite helpful because it saves time in so many other aspects. So not 100% analogous, but I would say from the trust aspect, there's a little bit of that. But we're getting a pretty solid reputation throughout the industry where that's becoming easier. Early stages of a business, you always have to prove yourself. I think we're doing that. And look, that's also why we have backers of our company, like the National Association of Realtors. Their VC arm backs us. So it's getting better and better at solving for some of that and being able to ramp up that initial take. So I guess to answer your question directly, the biggest wow is usually after the first transaction, like, just realizing that they can 100% focus on their client and let go of a good chunk of this stuff.
Yeah, that's awesome. It's got to be kind of a relief at that point, realize how much of that you can ultimately pass over to you guys. That's really cool.
Yeah.
Well, let's talk more on sort of this trust side, because I do think that's really interesting, and that's a challenge. I think that's a challenge that probably is more of an issue for a lot of startups, right? Because you're not only a new business that people don't know, but you're also a lot of times introducing a new concept that people are not familiar with, right? So, you mentioned a couple of things that you guys have done, but when you first got started, right, because Transactly is, just a few years old at this point, but you guys are on pace, I think, to do like 50,000 or help with 50,000 transactions this year. So what's been working, So how do you get into this industry where you have this issue of people trusting, and then you're introducing a whole new concept to them as well? What are some of the things that worked for you guys in the first couple of years to kind of get yourself established across the real estate industry?
It's not magic. It's, just what I said earlier. It's just earning each relationship, getting to know each customer one at a time. And then just like with an agent or team's real estate business, there's some word of mouth that spreads. Ads are great and you pick up customers that way, but the best customers that you pick up end up being referrals. So after you get a few of those big champions or ambassadors of what you do, then the rest of it kind of just starts to fall in place in terms of building that trust.
Interesting. So with these ambassador types, is there anything that you're doing to encourage that or sort of facilitate them spreading the word, or is that just happening naturally because everybody loves what you guys are doing?
Yeah, I think the best are organic, and luckily that's what we have. I know companies will pay ambassadors to go online and whatever, but we don't have any of that. So all the true testimonials and people that we have spreading the word are doing it because they really do appreciate what we do for them, which we couldn't be more thankful for. So that's not to say that we won't have some other type of role like that in the future, but to date it's been organic, and it's humbling.
Yeah, that's awesome. Well, congrats on that, because that's what you want as a startup or as a business in general, right? Is to have such a service that people can't help but tell each other about it. So that's awesome. Yeah. Very cool. Well, I do want to ask you another question, Bryan, about kind of just growing the company at this point, right? You're sort of mentioning talking to lots of investor types, and you guys are obviously in kind of a significant growth mode at this point. So what is that like? Obviously, a lot of our viewers are not necessarily running venture-backed startups, but I think most people are very curious about that. So would you mind telling us a little bit about what it's been like? Did you guys, and by the way, maybe we'll start at the beginning. Was Transactly initially funded from the start, or how did you guys approach raising funds to get the business going?
Well, I funded it originally. I sold a property management business I had, if you want the real answer. And then, yes, we started raising capital. It's very expensive to start a technology company. You would have to build a lot before you can actually start selling or earning revenue. So there's some funding there. And then, raising capital is just an option to acquire growth at a faster pace. So that's when, going back to what we said from a growth perspective, we raise capital to meet some of the demand that we have across the U.S. And you could grow a little bit slower and not have to raise that capital, but we chose to spread out much wider and serve the markets that were demanding us, and so that's why we ended up raising capital. And then there's of course the technology aspect of it. You want to continue to improve that product and engineering component of what you do.
Interesting. Yeah. And I think that's, for me, that is kind of a question. I think a lot of people, when you think of startups, you think of fundraising, you tend to think, I'm going to go raise money and then I'm going to build a business with that money, right? And I think when I talk to people that have actually done it, it's usually more, I'm building a business, and when I feel a need for the money, then I go try to get it and use it for that purpose. So, to help the folks that maybe don't really understand that approach, when do you know, right? So like as you start the business and obviously you're using the money to grow, you're using it to sort of accelerate things, when do you know you need it? Was there a certain amount of demand you weren't able to service, or was it sort of a feeling, or were there metrics that you're looking at? Again, sort of selfishly position there, but I think most people would be curious to know kind of what triggers that process.
Yeah, well, again, the technology is expensive, so you need to model it out. Right. You're going to have a good idea of what your expenses are going to be to build something, and I'd always recommend building an MVP. And look, I would always recommend starting out not raising capital if possible. And so the way we started was, again, the way that I self-funded it. I sold another business that I had and plowed it all into building our initial product that we got to market with in 2018. And then we found demand, started, market fit. And we started earning revenue, and we saw that there was more demand. So we built out a financial model to figure out what it would take to serve that demand over the next 2 or 3 years. And then so, you raise based on that. And, you can certainly not fill all the demand and not raise, but these are just tough decisions that founders and startups have to make on how they want to approach this stuff, because raising capital often comes with lots of strings attached, and you'll have to build a board, and as a founder and CEO, you'll need to report to that board and make sure that you deliver what you set out to do that in that model, in that forecast of revenue and meeting the demand.
Right.
But
a lot to figure out. Yeah.
Yeah. I mean, look, I think regardless of fundraising, anyone that's getting into business, even just starting out as an agent, which I was an agent for a period of time, you have to think through what you're going to do over the next 1 to 3 years. And the further you get out, the fuzzier it is. So you can never I think planning too far is fraught with all kinds of problems. But at least you need to have that first year figured out in terms of fundraising or not, just budgeting on what it's going to take, from going to market, spending ads, how you're going to bring in that revenue over time. And then what are you going to do with the profits? Are you going to take it all out? Or are you going to plow it back in? These are all things that you do have to kind of consider and plan for. We see that in some of the larger teams that I've gotten to know in the business that they do. I mean, it's impressive the kind of planning that they do. And, whether it's a great market or a down market, they're well prepared for it. And, like those teams now, I talked to one last week, had no concerns with a potential dip in the market because they're well prepared for something like that.
Interesting. Yeah, that's awesome. Yeah. So I think that's, obviously there's a lot of opportunity there within the real estate industry. There's a lot of folks that need to keep hearing that they need to run their business like a business, right? Need to do their work as if it's a company, right?
Absolutely. Yeah.
Makes sense. Well, I want to come back. We're getting close to running out of time here, Bryan, but I do want to come back to something just because I am also curious about it. So obviously you guys made the adjustment from sort of being, pure tech to switch into sort of tech enabled, because that's obviously a big demand, and it seems to be a sort of trend overall at this point that, we're getting to a point where people are saying, hey, I love the tech, but if you can bring somebody in that will help me use it or will just do it for me using the tech, I'm willing to pay for that, right? There's only so much I can sort of handle. So thinking kind of bigger picture, sort of across the whole real estate industry, or even maybe the whole U.S. economy for that matter. I mean, what's your opinion? Is this where tech is heading? Do we are you expecting to continue to see a lot of companies that offer this sort of hybrid model, or is this only appropriate in certain circumstances?
More broadly speaking, outside of residential real estate, I would say yes. I think tech enabled has a very strong future. So you've got software as a service, which has been a really hot sector where that's anything else, like you're paying for a piece of software on a monthly basis. And it's great, but and you can utilize that. But over time, I think some of those will pivot into more tech-enabled service offerings to really help their customers have a leg up. And so we found that in residential real estate. And I don't know if it's because of exactly that reason, but I think just because real estate is a people business, and so that's our it's become a vital part of our mission. Like our mission statement is to be the platform of choice for the people that are involved in real estate transactions. So we've started at the agent and helping them be that trusted source of information for the transaction. And so, the same thing, like it doesn't matter if you provide software that can coordinate the whole help you manage it all. It's much better if you've got another human being involved that's not just a customer support rep, right? It's better to have someone that can actually help you with some of that stuff. And Yeah, I'm a big believer that relationships are very important, and keeping people in the process is particularly in this industry where there's never a happy path. There's always outlier situations in every single real estate transaction. Having someone there to help navigate that is absolutely critical. So and you see it, I mean, across the board, even from a demand standpoint, rather, from like inside sales, I'm seeing become more and more of a tech-enabled service in addition to lead platform, along with lead platforms. So it'll be interesting to see what else comes next from a tech-enabled service aspect.
Yeah, absolutely. It does seem to be a continuing trend. So when you make like sort of a question on that theme here, so if you're in this situation, I think a lot of companies, the idea is I'm going to build tech because I don't want to have a big team of people, right? It's sort of, a really efficient way to approach things, a high revenue per employee kind of a situation. So when you get to that moment, you go, okay, actually, maybe we need to sort of approach this as tech enabled. Now you're going to have a big team of people you got to work with. So speaking maybe to a company that's in that situation, is kind of thinking about that change. How should they approach it? I mean, are these employees at 1099? What kind of structure did you arrange? Did you have to hire a big team of people to then manage those folks you were bringing on, or sort of how complicated was that exchange?
In terms of transitioning into being tech enabled?
Right. So going from sort of pure tech to tech enabled as a change in business model.
Yeah, I mean, there's some dynamics in the industry and our initial customers of our software that really made it somewhat easy for us. I'll give you an example. Like we had it initially when we rolled out, you can have a team that jumps in and starts using our platform with their own coordinator. Well, that coordinator is just working for that team and they want more work. And so if that team's okay with that, and most of them we found were, that coordinator can pick up other clients in other markets via our platform. So it leaned in, there's some network effects. But to answer your other question, yeah, we have a whole TC operations team. All of our TCs are 1099. We've got a little over 140 right now across the US, and they're really a large community that we have that we're very heavily engaged with. And they just like agents want to have a small business, and we help them do that.
Yeah, I love that. Yeah, and it's a great point, obviously, that working with these teams kind of had your network built in already, which makes it a lot easier. So I guess if you are in a business that's considering making that change, I mean, obviously thinking of it that way helps quite a bit to be able to sort of pull from the relationships you already have and make those adjustments there. So very cool. Well, my next question as we kind of get to the end here, Bryan, is if I'm a transaction coordinator and I'm hearing this and I'm going, okay, that sounds pretty nice. How do I get set up on this platform? How do they go about signing up with you guys?
You can go right to transactly.com and go to the careers page. There's, always an opening that we have, and we specifically state it for the markets that we need. And I would say if we don't have a direct opening with our advertised for your market, still reach out. You never know. Sometimes we have larger clients that jump in and require us to ramp up pretty quickly. So we're always looking for talent.
Very cool. And then obviously let's also ask the other side of the equation there, which is if I want to sign up for the Transactly service, obviously same website, probably a different landing page though?
Same website. Look, there's really no landing page. The other thing I would add, I mean, if you're a coordinator, you can, on your own, even if there's not an opening, you can jump in and use our software for yourself anytime.
Oh, okay.
And so that way you're already there, and then when we need the demand, we can tap you and let you know that there's some clients that are available. So agents, it's same process. I mean, you go to the website, and if we haven't made it easy enough to just create an account and find a coordinator, then we're not doing something right. But you can easily go to the website, create an account, find a coordinator, and if one's not available, we'll find one for you.
All right. Easy enough.
Yeah.
Love it. Very cool. All right. Well, that's all we have time for at this point. So, Bryan, I do want to thank you so much for joining me today.
Yeah, it was great. I appreciate it, Nick. Thank you.
Very cool. Well, for those of you tuning in, we are going to wrap up this episode of Broker Breakdown. I want to thank you for joining me here today, and join us again on the next episode. We'll talk to you then.